We have to deal with urgent matters on the channel. That's why today's episode is about Croatia and the problems that afflict the people there, and which, if uncontrolled, could affect the whole of Europe. Welcome to today's episode on the Fact Hunter channel. Imagine waking up to find your local supermarket deserted, aisles empty, and cash registers silent. This was the scene across Croatia from January 24, 2025, as citizens united in a nationwide boycott to protest soaring food prices and relentless inflation. In recent years, Croatia has often been dubbed the European Dubai due to its rapid development and booming tourism industry. However, beneath this veneer of prosperity lies a growing economic unease. The nation is currently grappling with significant economic challenges, with the term Bojkot becoming synonymous with the collective frustration of Croatians as they confront these hurdles. The challenge. Since adopting the euro in January 2023, Croatia has witnessed a steady climb in prices, particularly in essential commodities. By December 2024, the annual inflation rate had risen to 3.4%, the highest since April of that year. This surge has been most evident in food and non-alcoholic beverages, housing, utilities, and healthcare sectors. The escalating costs have strained household budgets, leading to widespread public dissatisfaction. In response to these economic pressures, consumer groups across Croatia organized a nationwide shopping boycott on January 24, 2025. The initiative urged citizens to refrain from making any purchases for the entire day, aiming to send a strong message to retailers and the government about the unsustainable price hikes. The impact was immediate and profound. Data from the Croatian Tax Administration revealed that daily sales plummeted by 50% compared to the same day in the previous week. Major retail chains, including prominent supermarkets, reported significantly reduced foot traffic, with many stores appearing almost empty. The boycott was not just a spontaneous act of defiance, but a well-coordinated effort reflecting deep-seated frustrations. Citizens highlighted instances where products in Croatian stores were priced significantly higher than in neighboring countries. For example, a German shampoo brand was reported to cost 130% more in Croatia than in Germany, underscoring the perceived price gouging by retailers. The success of the initial boycott spurred plans for a more extensive protest. Organizers announced a new and larger boycott scheduled for January 27, 2025, aiming to amplify the message to retailers and policymakers. The climax. The January 24th boycott marked a pivotal moment in Croatia's contemporary economic narrative. It showcased the power of collective action in challenging economic policies and practices perceived as unjust. The significant drop in sales served as a wake-up call to both retailers and policymakers about the urgent need to address the underlying causes of inflation and restore public trust. Government response. In reaction to the public outcry and the tangible impact of the boycott, the Croatian government took decisive measures. On January 31, 2025, authorities announced the addition of 40 more items to the list of basic products with capped prices, aiming to ease inflationary pressure on citizens. This move was seen as an attempt to alleviate the immediate financial strain on households and to demonstrate responsiveness to public concerns. However, some critics argued that price caps are a temporary solution and do not address the root causes of inflation. Broader impact. The Croatian boycott had a ripple effect across the Western Balkans. Inspired by Croatia's example, consumers in Serbia, Bosnia, Montenegro, and North Macedonia initiated similar boycotts to protest against rising prices in their respective countries. This regional movement underscored a shared frustration with economic conditions and highlighted the power of collective action in effecting change. Economic context. The inflationary pressures in Croatia are part of a broader global trend influenced by various factors, including supply chain disruptions, increased energy costs, and post-pandemic economic adjustments. However, specific local factors have exacerbated the situation. The booming tourism industry, while beneficial for the economy, has also contributed to rising living costs. In November 2024, the Croatian government announced plans to clamp down on short-term tourist rentals to ease the price squeeze on housing. The proposed legislation aimed to raise taxes on rental properties, excluding long-term residences and owner-occupied homes, in an effort to make renting more affordable for locals. Public sentiment. The boycotts and subsequent government actions have elicited mixed reactions from the public. Many citizens feel empowered by the success of the boycott, viewing it as a testament to the strength of collective action. Social media platforms have been abuzz with discussions, with many users expressing solidarity and sharing strategies to cope with rising prices. However, there is also skepticism about the long-term effectiveness of such measures. Some citizens are concerned that price caps may lead to shortages or reduced product quality. That without addressing the underlying economic issues, such as wage stagnation and reliance on tourism, the relief provided by these measures may be short-lived. Expert analysis. Economists have weighed in on the situation, offering various perspectives. Some argue that the government's intervention in capping prices is a necessary short-term measure to protect consumers from price gouging. They suggest that such actions can help stabilize the market and prevent exploitative practices during periods of economic volatility. Others caution that price controls can lead to unintended consequences, such as supply shortages or black markets. They advocate for more comprehensive economic reforms, including measures to increase domestic production, diversify the economy beyond tourism, and implement policies that promote wage growth. Future outlook. Looking ahead, the success of the Croatian boycott has set a precedent for consumer activism in the region. If inflation continues at its current pace, more large-scale protests and economic boycotts could arise, pressuring both businesses and the government to take further action. The government's decision to cap prices on additional products is a step toward easing financial strain, but long-term solutions will require structural changes. Policies that encourage domestic production, strengthen wage growth, and regulate the real estate market to prevent excessive price inflation could help mitigate the economic imbalance. Additionally, Croatia's reliance on tourism remains a double-edged sword. While it brings economic prosperity, it also drives up the cost of living for locals. Striking a balance between maintaining a booming tourism industry and ensuring affordable living conditions for citizens will be a key challenge in the coming years. Another question that remains is whether regional movements inspired by Croatia's boycott will continue to grow. If neighboring countries see success with similar initiatives, it could indicate a broader shift in consumer behavior, where people use their purchasing power as a form of protest against economic instability. Conclusion. The recent events in Croatia highlight the immense power of collective action. What started as a single-day boycott quickly evolved into a nationwide movement, forcing retailers and policymakers to respond. The discussion around inflation, price regulations, and economic sustainability is far from over. But one thing is clear: Croatian citizens have demonstrated that when people unite for a cause, they can influence change. The question now is, will this momentum continue? Will future protests and government policies shape Croatia into a more economically stable nation, or will inflationary pressures persist? Let us know your thoughts in the comments. And if you're interested in learning more about economic trends in Europe, check out our next video. Don't forget to like, share, and subscribe for more insights.